Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 1st, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Quick overview. Wave 1 is done, up at 114.72. We believe we're stair-stepping lower in a multi-year decline. The bias is we're going to go down to about a 78.6% retracement, roughly around 80. And that comes from back in 2007. We bottomed out at 70.53, right there, 70.53, right around May of 2007. We talked about this for many years as this was moving higher, said we should top out somewhere around 115, 120. We got to 114.72. Since roughly May of 2022, so we've been involved with this correction, top and reversal, almost 3 years now that it's April. Next monthly meal will make this thing 3 years that we've been grinding. That's why when I talked about this reversal, I said it would take multiple years. So we still have multiple more to go. And currently, jumping into the charting platform, we can see the dollar is just kind of stuck below the daily Fibbo and hovering around the 3-day Fibbo. And just sticking there. So it's tough right now because we broke below the daily and the 3-day, and we're trying to grind back towards this. And look, it's been stopping in its tracks. Went up, next day pushed lower, just still testing the zone. But I do believe we're more than likely going to see this dollar index go up and test this daily. This just looks like a three-wave correction that is in the process of forming. And this looks like the big move lower. And we're looking for a three-wave correction for this then to continuation lower. That's the bias. It is possible. I mean, there's always a possibility of just about anything in this crazy time that we could go breaking above this and start breaking above this 618 level. And we could potentially make a new high over here, maybe 110-ish, 111. But that's a very low probability, as opposed to making a lower high, lower low is a much higher probability. So far, so good. So when do we start get interested? If we get this low, well, from the swing point high to the swing point low, we start breaking above this 107.50 area, which is this swing point, prior swing point, then the likelihood we go up a little bit higher becomes a good possibility. We're talking about if we break above that 618 up here around that 108 level, then we're talking about we got about a 75% chance we're going to go visit 111. But again, that is extremely low probability. So I'm going to leave that X there saying this is off the table until price proves otherwise. In the interim, the bias is we're probably going to rally one more time. This does not look like a three-wave correction here. We're ready to go down. This looks more like the beginning of a three-wave correction. We still need one more pop toward the upside. So be careful that I definitely think we're coming down here. From the prior low to the high we've been talking about, we took out this 103.90 area. And the bias is once you do that, you have a 75% chance you're going to go visit the 1448, which is at 98.86. And we have a 70 plus percent chance we're going to go visit the 1272 extension at 97.68. That is in the books. It's done. So there's still a upwards of what, maybe 25% chance this thing could go up that way. But that's why I say up and until price proves otherwise, we got to break the magic fibbo. We got to break the lower high descending trend lines. And then finally, we got to break the 618 back to the upside before the tune or the drum has changed its tune to go up higher. So, in my humble opinion, be careful. I definitely think we're going down to these targets, but I think we're due for just a little bit more of this three-wave correction to go up, more than likely toward the maybe descending trend line and the magic fibbo to get rejected. Then we start pushing lower. Longer term, here's your targets. And remember, these targets are not the end target, multi-year target. It is way down here between 78 and 82, which is why I'm kind of saying 80. So this is our long-term, multi-year, several more years before we'll see this, but that's the longer-term target. Shorter-term target is this 1448 extension at 98.86, and then the 1272 at 97.68. All right, sounds good? All righty. So, any questions on where we think this is headed? Definitely think we're going down to these targets. No ifs, no buts, no ands, no exceptions. The only reason I would ever claim it's not going to do that, it's definitely going to do it. So I really can't say it's not going to do it. It might delay it if we do go breaking trend lines, breaking above 108, then maybe take another little tour up a little higher. But eventually, we're still going to get that lower high, lower low, and these targets will, I can assure you, come into play. Amen? So in the short term, not so convinced this is ready just to go tanking just yet, although it could, but typically you see a little three-wave correction, and I don't really see this little move up and the little, that portion being the three-wave. It looks like we want to do one more push higher. So be careful. Why is that important? Those of you that trade the euro dollar, there's a good chance if that does play out where the dollar index rallies to its magic fibbo line, then the euro dollar is going to decline to its magic fibbo line. But the bias is in the books already on this one. From the prior high to low, we did break above this 108 and change. See, we closed multiple days above that area. So the writing's on the wall, ladies and gentlemen. The euro is going to grind toward that 113.60, 70 plus. We're going to go to 114.95. Do I think we're going to reach these targets? Absolutely. Could we possibly do a little bit more of that correction toward the magic fibbo? That's the plan, more than likely. Either way, I'm long the euro dollar, and my shorter term targets are this 130, 113, 114.95, then 118.50, etc. But remember, the big long term target is way up here, roughly around that 140 to 145 area. Again, multiple years before we get there. Pound dollar, pretty much ditto. Could we possibly give a little bit more push lower toward the magic fibbo line? Yes. So be careful. I'm not saying let's short this thing because it go hundreds and hundreds and hundreds, even 1,000+ pips lower. No, I think it might drift a little bit lower. This magic fibbo line is starting to kind of turn a little upwards. You can see it's real thin right now. We were below it. We were above it. Typically, after you go breaking above, I personally like to see a retest of the magic fibbo to then go bouncing so we can get up to our extended targets. which are writings on the wall on this one. And I'll move this over just a touch. From the prior high to the recent low, we already broke above that 129 and change. You can see all these candles. So again, the rule is you do a 618 retracement, close above on a daily candle, not the wick, but the bodies. Then you have a 75% chance you're going to go visit the 1448 up at 136.27, and a 70 plus percent chance we're going to go visit that 137.97. I made bold statements. I'll make them again. I definitely think we're going up here. Currently, I am long. That doesn't mean you have to do it. That doesn't mean I no buy, sell, or hold recommendations. I'm not a certified financial planner. If you need someone to tell you what to do, then seek out the advice and maybe hire a financial planner. But no one cares more about your money than you do. This is an opportunity. We talked about going long down here, that the technical picture was due for a nice retracement. We said we would at least get some sort of 618 retracement. We got that, and we even closed above it. So now we believe the continuation is a high probability. So could we possibly come back, revisit the daily Fibbo line? Yes. I would even prefer it because that's just typical. You start your stair step up, you finally break above, you come back to retest, and then start focusing on your targets up here. And again, this is a future target, but it's not the ultimate long-term target. That baby's way up here in the 160 to 165 area. And where does that come from? We'll go back to MetaTrader, as the MPA PE5 software runs on MetaTrader 4 and NinjaTrader 8. And soon, hopefully, as we move into the future, we'll eventually start moving it over the trading view, but it takes time to do all of this, one thing at a time. But the bigger picture is on this monthly view, from the high, all-time high up here about 211, 2.11, we came all the way down to this ridiculously low of 1.03. The bias is we're going to stair step our way toward a 50/618 retracement zone. So that's why I'm kind of saying about 160 to 165, somewhere in the zone. It's going to take years to get up there, but it is what it is. If the euro if the dollar index visits this 80 or lower, no ifs, no buts, no ands, no exception, the euro is going to go visiting the 140, 145 area, in my humble opinion, which is roughly the 618, 786 zone for the euro dollar. And on the pound dollar, it's a little bit lower. It's more like the 50 to 618 retracement zone from the prior high to low. But if the dollar visits the 80 and lower, euro's going to the 140, 145. And if the dollar visits the 80 and lower, then the pound dollar is going to go visiting the 160, 165 area. Fair enough? All right. So in closing, what are we looking at? We're looking in the short term, we're probably going to get a little bit more grunting and grinding and a slowly up and down, sideways, slower correction to finish this last little correction. And the lowest I think the pound would go is probably the magic Fibbo line, which is roughly in the 127 area. I would like to see it bounce off of that, obviously, before we start focusing on our 136, 137, 97 targets. Amen? All right. What we also do on our GMF, Gary's Market Forecast, is look at Elliott Wave. And I called this way in advance. Typically, you wait for the 618 to break to then give you your target. We were discussing the 113 and 114.95 targets to the upside. But I kind of called this wave 2 over and prematurely because you wait for the price to prove it. But we did that. And this looks like this will be the low. And we're going to continuation much higher in the weeks, months, and years to come. So it looks like we have a 1, A, B, C, 2. We're working on a 3, 4, 5. And as we subdivide, this is corrective action. So what is happening with the euro? We got A going up in B. And we're looking at the opportunity for this thing to go somewhere in that 140, 145. When is it going to get there? 26, 27, 28, 29? We don't know. That's why I said multiple years. I'm playing this long-term trade, whether it's 2 years from now, 4 years from now, doesn't matter. Then once it's over, I'm going to look to short this coming back down where that AB would turn into a C down here. So I might as well go ahead and place one of those. So I can go over here. I can grab that and make a duplicate. Click and drag it, make a duplicate over here. And I'm going to look for the pound eventually, and this probably go out into the 2030s if you're interested in the long term. But that's what comes after AB is a C. And that's where I think we're ultimately headed. But first things first, we got multiple years to get up here, then multiple years to come back down. All right. So in closing, could we get a little bit more of a dip before we start ripping? Yes, that's the plan. Stair stepping for multiple months, multiple years as we work our way into a 3, 4, 5 A, B, C. Ultimately, if you think, well, ABCs, what is all that? We're doing there to here. And it's going to take multiple more years. But as the software time frame cycle, that's part of why the markets always stair step. The ebb and flow of the markets are typically based on multiple time frames. And as one time frame is breaking out, smaller time frames are correcting, et cetera, et cetera. Got it? All right, so A, B, 1, 2 is done. We're going higher in this B, and we're going to go 3, 4, 5, A, B, C, ultimately up here, and then eventually back down. Remember the big picture. We were short for multiple years as this baby was playing out, breaking down, breaking down, breaking down. And we expected that we were going to go for a correction. So this is why it's a A, B coming down in a C scenario. That's why I do expect more upside long term. But in the short term, I would not be surprised to see the pound and the euro retrace a little bit closer to their magic Fibbo lines, which you can see them right here, this orange line. And it is a magical level. It is major support and resistance. You can see over here, this is one in the past. We broke above, we retested, and the euro went up to its prior high. And then we started breaking down. We retested it to fail. So even though that the euro is now broke above, we haven't retested it yet to start breaking out again, but that is the plan. Amen? And remember your targets. Write those down. Take a screenshot. 113.63, 114.95, and this is probably still multiple weeks out. And then we're probably talking multiple years before we get to the big target up at that 140, 145. Pound, same thing. Short-term target, multiple weeks probably before we get up to these targets. Multiple years before we get to that target up here around that 160, 165. Fair enough? All right. Let's jump into, look at a couple of things. The dollar yen. Again, I think there's more downside on the dollar yen. It is holding that 618 area on the bigger move. So if we come back over here and look from this prior low to high, here's the 618 level. It did bounce off of there. So I'm watching that closely because look at what it means. If we can start closing below that 618 level, right around that 146 area, it opens the door to 1,000 pip decline toward 136. Possibly could go up here, but we still got to start breaking above this 153 above the magic Fibbo, above this 153, 154 area before we start targeting 160, 162. But for now, we're still breaking down. And if we can close below this swing point, which is right at our 618, so this little green box area is the 618786. Bring that over here. So, Mr. Tucson, if we start breaking below this low, we should test this 786 level. And if we break that, then we got a 75% chance we're coming down to 136 area. Amen? We have been extremely successful trading this. This goes back several years ago when we talked about as long as we stay above this 127. I made a bold statement months and months, even years in advance, that we were at least going to go test 160. Went up to about 162. All right, so far so good. And we were in a carry trade, made a lot of profit along the way. And even after the first pullback, I talked about going back long over 1,000+ pip run because we were likely going to go toward that 618. But this is why we're more bearish at the moment. This prior high to low, we've mustered a lower high. And if you use your 3-point Fib02 from the high to the lower high, then it sets up some big potential move to the downside. So this is why I'm watching on the most recent activity. If we start closing below that 146, say about 145-ish level, then we should test the 143 level. If we break that, it's over. We're going to eventually stair step down toward that 136, 134 area. Amen? So be careful. Up and until we break above the 153, 54 area, then we could think much higher, or we start breaking below the 130, 145, 143 area, this big green box. We start closing below that, then we have a very nice juicy trade to the downside, shooting for that 136 target, which is down over here. It's kind of behind those numbers, but let me zoom in so we can see that again. But it does set up that bigger trade. If we can break this box, we're going lower down to that 136 area. You can see it right there, 136. And that's breaking the 146 low. That sets the tone to go much lower. So be careful. I won't think we're going to go up here. So basically, Mr. Tucson and others, this is off the table until price proves otherwise. A, we got to break the magic Fibbo line. B, we got to go above this 155 area. We do that, then we have a 75% chance we're going to go visit 160. 70 plus, we're going to go visit 162. In the short term, as long as we're below the magic Fibbo line, we're more bearish than bullish. The only reason why I'm even bringing this target up here is because the recent low to high, we're holding that 618 retracement level. That's potentially bullish. Potentially. But I won't get bullish until we break the magic Fibbo, we take out the 155 area, then by all means I'll shoot for 160, 162. In the short term, we do break this swing point low, which is that 618 area, then we go to the opposite direction. Say we have a 75% chance we're going down to 136 area. Amen? So that's your long and short for the dollar yen. Pound yen, it too is from the recent high to low, retraced into the 618786 and is getting rejected. We're also right at the magic Fibbo line. So we start closing below that, it starts to get a lot more bearish. Amen? And from the prior low to the high, we did also, just like the euro, dollar yen here, we did bounce off the 618. That's potentially bullish. But while you're retracing back up, you hit your resistance zone and get rejected. We start taking this low down here around that 187 level. We start taking that swing point low out. Then we got 1,000 pip run down to 177, 174. So you might want to mark that on your calendars or mark it on a chart and set an alert. We start closing below this swing point low, then we can expect a 75% chance we're going to continue to stair step our way lower for weeks and months to reach this 177 target. In the interim, if price proves otherwise and we actually go breaking above this 196 area and close, then we could start targeting 200 and 202. But until price proves otherwise, I'm more bearish than bullish. Amen? All right. Again, once we break that 187 area, game on to go about 1,000 pips lower. Once we break the 195 area, 196 up here, then we could shoot for about a 400 to 600 point move higher. In the interim, a lot of chop zone in here. And this bigger picture, the high, the low, this lower high, lower low, lower high. That's why I'm more leaning to the bearish side, because you can look from the bigger trend lines. We've been making lower highs, and no, we haven't made a new low below this yet. But all of this overlapping chopping action wants to believe that we need a new low, which would put us at these targets down here. Amen? All right. So in closing, more likely we're going to continue to break down than we're going to go breaking up, but force price to prove itself and you're much more conservative. You can just set an alert till we close below this 187 area. Once we do, then we can say, okay, we can short it down 1,000 pips, or you can wait till it breaks above 196, and then you can take a long trade for 400 to 600 pips to the upside. Any questions on that? Let's jump into everything that everyone wants to know. What's the market going to do? Is this latest swing point over? Is it ready to call it quits and start going back up? Well, Mr. Tucson, looking at SPX, this can't be a 1, 2, 3, because if it's a wave 1 down and a 2 up, wave 2s cannot break beyond the starting point. But this looks more like a ABC, and that would warrant a bottom reversal we've been talking about for this thing to go breaking out into the 6,063, maybe 6,600 level. That kind of fits my timing, that we believe we're going to go breaking out into mid to late summer, maybe early fall, and we should be up into the 63 to 6,600, maybe as high as that 66 to 6,800 zone, maybe. But I'm definitely thinking we're going to get at least to 63. My long-term target has been 6,600, and maybe we go a little bit above that, but be careful down here. Why? Because this looks more like an AB expanded flat. When it's a B wave, you can do an expanded flat, which you can break above the prior high and give this the next little 5 wave down, and that would be the ABC. Right? So if this is the A and this was the B, and we're working on C, that's finishing, then it sets the tone for a nice little 5 wave up to get us into this target zone of 63 to 66, maybe a little blow off top above that. Timing wise, it should take months for us to get out until September, October, maybe fall area before that happens. The big thing to decide is once we get up here, you need to come and be soundly fit mentally, physically, and spiritually, because the markets are due for Elizabeth, I'm coming to join you, honey. And for those of you that don't know, that's from Fred G. Sanford, Sanford and Son, from many years ago. He'd say, Red Fox, Elizabeth, I'm coming to join you, honey. Here comes the big one. Well, here it comes. I think it's not going to happen until we get up here to that 66 to 6,800 level. Kind of my top is 6,600. I have stated that before we break 7,000, we're going to break 4,000. So let's do a stair step. Look at ES. Kind of already put it on my levels. We got our daily magic fibbo. We broke below the daily. We retested and were rejected. And under the ES, we did not make a new swing point low. We have a higher low. So far, so good. Well, before we get real bullish, thinking, ooh, we're going up to 63 to 6,600, we got to get above that magic fibbo level, and we got to take out that 618 level from the prior high to low, the 618 right around there, that 5,900 level. We do that, then it's game on. So you can mark a little trade alert or set an alert up here. We start breaking and closing above 5,900. It's game over. We're going to go to 63 to 6,600. That's the plan. In the short term, we did come back, and so far, looking at this as I zoom in, we got a deep retracement the other day. Is it the tariffs? What is it? The tariff talk. We got this big, huge, massive rejection and reversal yesterday, and it's holding within that 618 arena. Now, if this decides and we start breaking the swing point low, here's your targets: 54.60, 54.17. If what? If we break this swing point low, right around that 55.30 area, it's over. We're going to go down here. And if we don't hold that, we're going to come visit the magic fibbo, the 3-day right there, 3-day magic fibbo level, which is around 5,300. So could we even come down here before we go up to 66? Yes. This does not deter the fact that, we've already topped in reverse and we didn't quite get to 63. We topped out around that 62 and change area, and that was kind of like the end, and we're not going to go any further. And we're beginning the big Elizabeth, I'm coming to join you. I don't see it that way. I see a big rally going into the summer, into late fall, and that pushing us up to this target. But technical picture is the technical picture. So James, Ian, Mr. Tucson, Emil, Alterstorff, all of our archivers, anything below Harold, we start closing below this, then I would be targeting 54.60, followed by 54.17. That doesn't hold. Then it's like a heat-seeking magical moment. We're going to get sucked down to that 3-day magic fibbo level, which is this box down here. What is that? That is the magic fibbo line, this orange line on a 3-day chart. Not the first time I talked about that, but you can see it is right at it. Okay? But be careful. This might be the end in reversal. What do we have tomorrow? The tariffs, right? All the tariffs supposed to talk. Well, a lot of times it's just a negotiating tool. But why does the world think that the U.S. should pay tariffs for everything we export? We should pay heavy tariffs to all other countries, but yet anybody coming to our country should pay no tariffs. We've been abused in that arena. So it's time we get some level playing field. And remember, for those consumers, well, tariffs mean higher prices for consumers, and it's a horrible thing for the middle class and for this and that. You hear all these people just blah, 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 blah. Well, we have so many items that are imported into this country, and there's many choices. And the only time you ever pay higher prices for a tariff, if you buy the product, and you do have options. So before you start freaking out in the market, uncertainty about tariffs, so we're getting a correction. Well, this is all that is a correction. We were due after these runs for a correction. And this is why I'm thinking this is the A, the B, and the C, and we're getting ready for a reversal higher. But if price proves otherwise and we start taking out the swing point low of 5,500, then you got 54.60, 54.17. And if that doesn't hold, very probable, I would say, if we start taking out this swing point low, we're not only going to get to these targets, but we're going to come down and visit the magic Fibbo on a 3-day. Fair enough? And God forbid that doesn't hold, then we're going to go visit the weekly magic Fibbo line, which is about 5,000. Fair enough? And as long as that holds, I don't want to see anything lower than that. Even if we get another big tariff talk and we go down, we could still bounce off of there, still make it up to our quadrant by late fall. And then we start talking, Elizabeth, I'm coming to join you, honey. So remember, we're talking a major, major correction. What is going to be the catalyst? Well, it's just like detox and anything else. You got an alcoholic, you stop him on giving him alcohol. He's got the shakes, this, that, and all these other things, and drugs the same way. Well, marketplace is like a drug addict. When they get all this cash and spending money left over right and the government spending, the markets like to rally on that. There's a lot of cash. But you take away $1 trillion+ or 2 trillion, like the plan, and cut back on the fraud, waste, and abuse, then you're going to have a detrimental effects that's ultimately going to happen, but it's got to be weeded out. So it's like, well, I love some of the talking pundits. They're like, well, all of these deportations are terrible. Well, they're criminals, they're murderers, they're rapists, they're the worst of the worst criminals. And they always talk about, well, there's this one person was a gay barber that got mixed up in it was and they're like, they should do proper vetting. They should do proper vetting on these criminals before you deport them. Well, how about we reverse that question and say, well, where was the proper vetting when you let all these millions of immigrants into this country illegally? So it's a two-way street here, people. You can't expect us to properly vet. And it's amazing how a lot of these talking pundits are more worried about these criminals being deported than they were about all the American families that dealt with death, murder, rape. 12-year-old little girl got strangled, all these horrible things. And the touches of the parents, the people, the relatives, the hundreds and hundreds of people that are dying, and even hundreds of thousands of people are dying with all the fentanyl coming across. So you have to shut the border down. You have to give reason for any type of crime. You got to have a reason for what? If you pay no consequences, then what do? They continue to meet the crime. I digress, but what does that got to do with the market? A lot of this is part of that. Well, Trump came on board, and then when there was the tariff talk and all of this tariff uncertainty, the talking pundits always want to give, right, Mr. Tucson? I got to give you a reason. What's the reason? What's the reason? Well, the markets can't continually go up forever. They always have to correct, and eventually you're going to get the crash. And believe me, I think it's going to happen later this year. And we're going to, before we break 7,000, we're going to break 4,000. And what does that look like? That looks like us coming down and visiting the magic Fibbo on a monthly chart. This big box down here below 4,000 is the magic Fibbo on a monthly chart. So I can kind of squiggly line this. We're probably at or near a bottom. I said that with S&P a few weeks ago. We should reverse somewhere between 55 and 5,300. And then we should start grinding our way up into the 6,063 to 6,600 level. Maybe we get a little blow off top near about 68. That's a big if. And then come fall, we're going to then get the big correction. Well, Emil, the hardest thing is obviously timing. What is it going to exactly happen? Nobody knows, but it's difficult to give you the exact time. I just know once we're up in that 63 to 6,600 level, I'm looking for all signs and symptoms for some massive correction to the downside, which includes a multi-year type of correction down to get us below 4,000. Amen? And remember when I showed you this years ago, well, not years ago, that happened years ago, but I showed you the scenario where the market made this big correction way back. We got to kind of condense this way back, but this goes back to this big correction over here back in the, I actually got to go to a weekly chart. Can't pull enough in there. But this goes back way back into dot-com bubble burst. We kind of had the dot-com crash with the bubble burst. Then we rallied for multiple years to retest. And then we had what? The financial crisis. And we did this multi-year from roughly 2000, bottomed a couple of years later. Then we rallied for several more years, only to come back and retest the highs to yet get a new lower high, a big ABC type of correction that took ultimately about 9 years from the time it topped to the time it bottomed. But notice, by the time we finally broke all-time highs, it took upwards of about 13 years. So this bigger correction I'm talking about, in my humble opinion, for its timing, would be sometime late fall-ish is what I'm looking at. This could be some type of correction like this, Mr. Tucson. It could take multiple years to get down here, but it might mean we're not going to see all-time highs for multiple more years, somewhat similar to this. That's not all doom and gloom, because look, it went from about 700 and change back to 1500, and it took multiple years and nice rallies. So it's not all, well, once we start to go down in the fall, it's just going to go down every day, every week, every month for multiple years, and it's never going to go up. Of course not. It stair steps lower, stair steps higher, but we're due for some sort of long duration correction where we may not see all-time highs again for multiple years. And this is just an example that took about 13 years from the time we topped to the time we bottomed and finally reversed to make new highs. It took about 13 years. Now that sounds kind of boring, doesn't it? Well, I hope it doesn't take 13 years. Well, that's why I'm excited that once we get to this upper quadrant up here, we can short some things to the downside, play some inverse ETFs. There's many ways to play it, or buy puts, long-term puts. So there's many ways to play this. So back to ES. I do think this longer term picture, we're going to stair step much lower. We still got to go reach our targets before we do. And I think it's going to be a multi-year type of correction. And then we can, once we're there, we can talk about, well, when do we get a bounce? Well, we're kind of doing it right now, zooming in on the current price. And we're at or near a bottom. I said it last week. We got a nice rally, and then we got another big sell-off. Most of the other markets actually made new lows. The ES did not. So let me zoom that in so you can see the big picture. So we actually didn't make a new low. So Emil, this could be the end of that ABC, and this fits the message here that we're probably going to go grinding up. And maybe it's tomorrow with the official day of all the tariffs. What happened last time during the Trump administration? We did tariffs, China, etc. So let me go out to a weekly. And under his administration, what did the markets do with all the tariff information? They still rallied. Come back here. 2016. So Trump took over in 2016 up to 2020. And then we rallied up until the end. And then we had a little COVID action and then the market recovery. But even with all those tariffs then, look at the market. They just kept stair stepping higher. So this is why I don't think the tariffs is an end game. It's a wonderful thing to show respect for our country. What is it going to do? It's going to force manufacturers to build their products in the U.S. to prevent them from paying tariffs. It's So that's a lot of huge, big time jobs coming back to this country. One thing I never liked, especially being in the pharmaceutical industry, is all of our pharmaceutical manufacturing was sent out to other countries. And China, do you think we should rely on China to produce antibiotics and medications we need, formula, aspirin, all kind of things? There was very little manufacturing of any product. Well, all these tariffs he's going to be hitting the pharmaceutical industry with, it's going to force them to come back to the United States and manufacture drugs here. Well, we're the most powerful country in the world. We should be able to manufacture our own steel, build our own military, build ships, do it all. Pharmaceuticals, we should produce all of the major drugs, pharmaceuticals, antibiotic, all the things that are critical for a society to function, not rely on somebody else, especially countries that hate us and would love to see our demise. There you have it. So these tariffs are a good thing. It just needs time to change the pace and start rebuilding in this country. And if they don't and they continue to do it, then we make billions and billions and billions of dollars in tariffs, and that can help pay down the debt as well. All right. So again, I digress, but what's that got to do with SPX? During the Trump administration, even with the tariffs, it grew. So looking at current price action, I'll go back to ES since I already have the chart there. It looks like we're due for the big reversal. I said it a couple of weeks ago that we would reverse somewhere between 55 and 53. We're there. We reached the 55. We didn't get to the 53, but where did the 53 come from? That 3-day magic Fibbo line. So I was able to type that in there for you. So, Mr. Tucson, is this the bottom reversal? That's what I'm thinking. That is definitely what I'm thinking. I thought this would be the reversal. Some of the other markets did give us a little lower low. ES did not. SPX did by just a hair, right? Or as the index right there. So could this be the end? Yeah. When do we start getting a little warm and fuzzy? We got to break this 59 area. Let me show you something that is not appealing and would be very detrimental. If this is the end of that correction, and we look at this as like a 1, 2, 3, 4, 5, and this little 5 wave down, 1, 2, 3, 4, 5. If that 5 wave correction down leads us to a 3 wave correction up, and we stop in our tracks at 59, then that sets up a much bigger move lower. Amen? So I definitely do not want to see that. I definitely want to see the reversal. But we cannot stop and reject off the 59 and come back and break new low. If we do that in a 3-wave correction, get rejected, and we start breaking back down, Houston, we have a major problem. That would warrant maybe even this might not even come to pass. That would mean we're definitely getting a lot more downside. And how much more downside would that look like? Well, here you go. Use a 3.2. We go from the current swing point high to the current swing point low, and we run up toward that 618 resistance. And if we don't break it and we start breaking back down, then it looks like 5,200 would be the minimum, 5,150, maybe 5,000, maybe even 4,800. So it's not doom and gloom, we go into zero, but if we get a little 3-wave correction here, we can't break above that 59 area, and we get rejected. And what does the rejection look like? I would not want to see with a 2.2, if this is going to be the low and that's going to be the high over here, I would not want to see us reject and come back down below that 56, 55 area right here. So what am I saying? Mr. Tucson, I think we're reversed. I thought we reversed the other day, and this is just a retracement, but I think we're reversing. And I don't want to see a 3-wave correction up to this 59 area and a reject. But if we go up to this area, we get rejected. As long as we hold this 55, 56 area right there, my 618786, then we could do that and still be okay. That's fine. But if we do a three-wave correction up to this level, and then we break below that 55 level, not only does it open the door to 40, 54, 53 on a short term, but it opens a much bigger scale down to 52, 5,000, even 4,800. Amen? Everybody with me? So, technical picture is more upside. Hint, hint, hint. More upside. Yes. Woohoo. Now, how much more upside? We need to get above that 59. If we start closing daily candle body, not a wick, but a body above the 59 area, then it's game on for us to start shooting for 62, 63, 65. Watch that closely. Yes, we're still below the magic Fibbo. That's very important we get back above it. Then that we finally break 59. Now, what's acceptable also, Mr. Tucson, is if we go up and break the magic Fibbo, we go up toward 59, we retrace back down and reach the magic Fibbo to bounce off of it. That's still okay, but it kind of would fit even with that high to low, this low to that high. That 618786 is above the magic Fibbo as we speak. So we could retrace down to that to bounce hand in hand. So I'm definitely more bullish than bearish on SP, XPX, SPY. I do think this is part even SPY. You can see we did get a lower low. We still need the same thing. We got to break above this 56, 587 area from the high to the, actually, let me get the new low on there. Let me do a refresher on this real quick, and I'll put some new charting. Got too many old lines on here as we analyze this in great detail. But from the prior high to the low, we want to get back above not only the magic Fibbo we got rejected from last time, but above this 589, 587, 588 area. Here's 590. So this zone right here is going to be a little bit of resistance, obviously. Let me get my color over here. This will be a resistance zone. I'll change that to pink once we get up there. But once we clear that hurdle, it's looking good. You're talking looking beautiful. For what? 622, 631, 650. So in closing, I think we're going higher. We did get a lower low other than on ES. On all the other SPX, we got a lower low. SPY, we got a lower low. But ES, we did not. That's fine. So this states that this is a good reversal point. And again, for those of you keeping score, what we don't want to see on any of these is a three-wave correction to get bogged down around that 590 area, 5,900, 590, close to it. For this SPY, around that 580 to 590 area. I don't want to see a three-wave correction, then a reversal back down, breaking lows. Then we're going to go much lower. I do think this is a reversal point, and we're going to go up. And once we take this out, then we got our 62, 63, 65 area. And that fits the tone with ES. The 6,300, 64, 65, 66 area. Got it? So it's rinse and repeat. So I think we're going to go higher. If we do, and something comes up, Fed speaks, something or something else, and we see this close below the low, then we know we're 54.60, 54.17, and likely we're going to go test this 5,300 area. Any questions? NASDAQ. Same. We got a new swing point low. That part's okay. Again, I don't want to see a three-wave correction and get bogged down around this 21, 22. So let me pull this. Actually, let me put a fresh one on here from the prior high to the low, which is there. From the prior high to low, we want to get above this 21,000 area. So this is a very important zone up here for us to break. This zone right there. Once we do, game on for us to go. Get some of these out of the way. 4 hour 22.8, 23.2, 24.4. And I do think at some point when we start getting into the 24 to 26,000 area is where I think the NASDAQ is going to reverse out into the fall. So I need to pull this back out into the fall over here, September-ish. Somewhere out in this zone, we should be somewhere in that 24 to 26,000 is the plan. In the short term, we need to force price to prove itself by doing what? By holding this swing point low, breaking back above the daily magic fibbo, got it marked right there, the pink box. Orange line is the magic fibbo. Then we start testing. If we break above the magic fibbo, we're going to go and test this 21 level. We break that, we should go test 23 at 21.6. So from 21,000 to 21.6 area. Once we close above that, it's over. And we're talking 1,200 point move toward that 22.8. And that would be from 21.6 to 23.278. You're talking upwards of almost 1,000 points. So we're talking big moves to the upside once we get above the daily magic fibbo line. Amen? And then we take out that 618,786 resistance. Any questions on that? So I think we've bottom reversed. This is a good place for that ABC to be over. And even if this was the 1, 2, 3, 4, 5, this was not going to make new highs like the like the ES or SP. So this one could be a 1, 2, 3, 4, 5. So this is why I'm showing some caution right there, Emil. If that is the 5 wave down right here, 1, 2, 3, 4, 5. What we don't want to see is a 3 wave correction getting stopped in its tracks around that 618 and then turning back down for a bigger 5 wave down. So as optimistic as I am, this is going to rally up. You need to be in a position of authority as we start getting back toward magic fibbo in this resistance zone. But what we don't want to see is a 3 wave correction up after a potential 5 wave down. Uh-oh. And then a 3 wave correction, then that would lead to another 5 wave down, which would be substantial and pushing us much lower. So we're not out of the woods yet. We still got to get back above the magic fibbo. Then we got to break the 618 back to the upside. Then it's clear sailing into the 23, 24, 26,000. And again, what I think is going to transpire, probably go up, get a little 618 retracement, break out, maybe hit the 618 to the upside, come back, hit the magic fibbo to bounce and start stair stepping up into this zone. But that would put us out somewhere in that 24 to 26 zone by fall, September, October-ish zone. That's kind of like what I'm thinking. Any questions? So be sure that if you're going long here, which I think is a good move, we're going to go up. Be sure you're in a position of authority because we do have to clear some major hurdles before we can get to the promised land up here. QQQ, basically the same. After a 5 wave down, We don't want to see a three-wave correction, but it's ditto. I think we're definitely going to go higher. We got to get above the magic Fibo. Then we got to start clearing that 618, 786 zone. Then it's game on. Once we do that, to then go 552, 562, 588, onward and upward we go. Fair enough? Again, what you don't want to see is a three-wave correction that gets us a run toward that 618 to the upside and then gets rejected. That would be a big issue. And like I showed you on the previous chart, if we take this, and I'll remove these lines and I'll show you a fresh one, and this ends up being the move that we, from this, actually a 3.2, it's 3.2 right there, from this high to the current low, if we can only rally back to that 618 level, which is about that 500 zone, a little bit more 505-ish, then it sets up 400, 402, even down to 375. Ouch, right? So we don't want to see a three-wave correction stop in its track at the 618. What is the 618? It is from the recent high to the recent low. We don't want to, pretty accurate right there. We don't want to see a rejection. If we do, then we start breaking back below this little support zone, which would be the low to that high. I run Fibos all day long. This would be the low. That would be the high. And if we start breaking back below this little box, see what that's what that box is for. We run up here, we get rejected, we don't hold that. Then not only is it set up 450, 447, 480, 30 down here, but it sets up the bigger move down toward this 400 area and maybe even 375. Amen? So that's what we're going to keep an eye on. I do think we're definitely going higher. Hint, hint, hint. We don't want to stop up here at this 509, 510 level. We can reach it, retrace, hold a 618 retracement off of that move, then go, that'd be fine. But if we reject and we don't hold this little support zone, then it's game on to go much lower. RTY, same thing. Let me zoom all this in. Gnarly. Look at all those lines on that chart. Well, that's all your support and resistance, though. I still think this, we did get a slight lower low, just barely. And this could be the end. I'm still thinking this is going to rally. And again, this is going to be different where the ES, S&P, NASDAQ, etc., go on to make new all-time highs. I think the small caps, Russell, is only going to be able to muster a correction toward this 2300 slash 2400 on RTY, or as the futures index, and not break all-time highs. Amen? Any questions? So everybody goes to all-time highs. What are we talking about? ES goes to that 63 to 6600. NASDAQ goes to that 24,000, 26,000. Russell is only going to go to about 23 to 2400 level, which would end up with yet another lower high, setting up the lower low. And we go to IWM, for example. We talked about buying this zone. We did make a new low. We went toward that extension. No surprise, we broke below the 618. We came down and tested it. Now we're bouncing. So I do think this is bottom reversal. I'm still long this move to the upside. I think we are going to go at least to the daily Fibo up here and likely going to go testing this 230 to 240 range, 230 to 240 area. So it's roughly a portion of the RTY 2000, and we're at basically 200. So it's like 1/10. So Emil, you can see the numbers, 235, 240 is where I think the highest we will go. after this pullback. Would not be surprised to see us go grinding up here, get another little 618 retracement to start stair stepping out here and start pushing that 230 to 240 range. And when should that take place? Out into September-ish, September, October. So I'm starting looking for this to go rallying up and continue to grunt and grind toward that level as we get September, October-ish. Got it? All right. Nikkei is still struggling. Tried to break back in this consolidation zone, but was rejected heavily. That means global liquidity is a little bit suffering right now. Maybe they're waiting to see what the U.S. is going to do, if it's going to start to rally back. But I don't think you're going to see Nikkei and global liquidity dry up and shrink, and this thing goes plummeting while our ES goes up to 66, 63, 6,600. Our NASDAQ goes to 24 to 26,000, and our Russell goes to that 230 to 240 on IWM, or Russell 2300 to 2400 range. I don't think you're going to see all those go ripping and this Nikkei go down. I'm looking for all the above. Nikkei to start rallying into this zone, our markets rally to those zone, and then by late fall-ish, September, October, we then get the bigger, Elizabeth, I'm coming to join you, honey. All right. Keep an eye on this move here from the low to the current high. As long as we hold that 618 level, there's still more upside to be had even on the Nikkei. Amen? So we're testing about a 50% retracement at the moment, dipping toward the 618. But as long as this big green box holds, no reason to believe we were not going to get that into fall rally, and that would push us up toward that 44, 46,000. And if we get a blow off top, then maybe toward 50,000. And why do we look at the Nikkei? I don't necessarily trade it. I just use it as a barometer, if you will, for global liquidity. Fair enough? All right, continue. What about our other trades we've been talking about? Tesla. I think Tesla is getting ready to go breaking out. They got some data coming out on sales, but I think all of this craziness about blowing up and mocktail and those Molotov cocktails and burning dealerships and cars, it's insane. I don't know what these crazy liberals are thinking. They're insane because he was the prodigal son, you know, EVs. He's the EV guy. We're going to save the planet with electric vehicles. Then all of a sudden, because he's working with Trump trying to save our country from going bankrupt, they hate him now. He's the one that's going to have robots to take care of the elderly, then help them do things they can't do soon. And he's also got these chips that allow people with brain issues, TBIs and things, to help them. And then he's also got the ones for the spinal cord that could potentially help paraplegics walk again. I mean, it's tremendous things this guy's doing. AI revolution, robotics is going to be huge for this aging population. So I don't know why you would hate the man that is brilliant. I mean, look at what he's done with SpaceX and everything he touches. So I would not be counting on Tesla to continue to get browbeaten. I'm betting against it. Not only Tesla going higher, but our TSLL. Look at that, Emil. I think this baby's getting ready to launch. So I think you're going to see this as the markets recover, Tesla recovers, TSLL is going to recover with 2x leverage, looking up here to the 40s to 50 range, kind of what I'm thinking. When should it get up there? Sometime by this late fall, probably, when the markets start topping out, when NASDAQ starts to reach that 24,000 to 26,000 ES, keep saying them again, 6,400 to 6,600, etc. Where do I think TSLL is going to be? Well, if Tesla can get back to that $500 to $600 range, TSLL should be somewhere in that $40 to $60 range. And yes, I own this. So no buy, sell to hold. I can't tell you what to do. I'm just telling you the technical picture. The market should recover. Yes, this should even recover. What if we only come up to this 618 from the prior high to low? We break the Fibbo and we go up into this big yellow box. Then I think you'll be happy buying down at these lows and selling somewhere around that $20 to $30 range. I think you'll be thrilled with that. Even if we get the markets to do that three-wave correction before the bigger downfall, I still think we're going to get up to this box up here. So we're talking more than like a double, especially when we were down here, salivate country for us to get up here. But the plan is not to hit here and reject. The plan is to go up into the stratosphere into the $40 to $60 range. Amen? So again, Tesla's got a lot of things coming out later this year with the auto taxis, robot taxis, and a lot of other things. So, especially after all of this insanity of browbeating his company down because he's helping this administration, why would anyone be against the man? It's insane. And what they don't realize, or maybe they don't think, you see all these people protesting. They're protesting in my town. Emil, we're big time red area here in Texas, but they were protesting the Tesla dealership in Southlake. It's kind of interesting. Some older people. Look at my grandparents out there. I was like, what? Who are these people? But what they don't realize, they're like, well, let's take away Tesla. Well, without Tesla, you don't have charging stations. So no matter what other EV you buy, you want to save the planet, then you want an EV. Well, there's no charging stations. So without Tesla, you can't have an EV, right? Or you can have one at your house and you just plug it in and go around town, but you can't travel with it. There's no charging stations. So it's really insane what they're doing. I digress again, but Tesla's browbeating, I think, is over. And I think this is going to go soaring. And again, when you look at all the big hedge funds, investors buying millions upon millions, we're talking hundreds of millions of dollars between all of these investors. Millions, I should say, millions and millions and millions of shares that they're buying. You think they're going to let Tesla go to zero when all of these big hedge funds are buying that much? I don't believe it. So could we get back to the 500? Yeah, I think Tesla's going to go break it out. Long term, certainly. Shorter term, by fall, I think we're going to be sitting up here somewhere in that 500 to 600 range. So this is my target zone up here for Tesla as we get into fall. September, October, somewhere around there. Whoops. So I need to press that a little bit more, drag this over. So sometime by October-ish, we should be up there, somewhere in that upper 500 to 600-ish range. When do we start getting bullish from the high to the low? We got to take out the magic Fibbo. That's first off. Then we got to start breaking above this 386. Then the fourth, once we break that, we'll go to 430. We break that. Then it's game on to reach our 500 to 600 target. And that's where I think sometime in that September, October zone, we should have that up there. So TSLL in the same breath should be way up here is the target zone. Sometime in that September-ish. This could happen sooner. because the big release with the robo taxis and all, I think, are due in like June, something like that. So we might get this rip before we get to September, October. We shall see. But I do own it. And last time I talked about that, you well know, come over here to our list. And I said it last October that consider TSLL, expect Tesla hit 500, consider the TSLL trade. And how did that play out? Like a thing of beauty, right? Talk about a thing of beauty. I'll come back to that one. And that played out last October. We went from about $8 and change all the way to 41.47. Not too shabby. And look at when I told you, October, right as it was bottoming. Hint, hint, hint. So I think this is the same. We're bottoming and we're working our way up. And again, I'm kind of shooting for several months out. September, October, maybe we get here by June when the big announcement of robo taxis and stuff. But I think this is where we're headed. Any questions on that? All trading involves risk, substantial risk of loss. This is a leveraged product, but I'm willing to take the risk personally. And I did load up on shares. I kept buying the dip. And even as we talked about that, we set it over here. The lower it goes, add more. The lower it goes. Well, it went lower. Ooh, did it go lower? And then we reached the buy zone, 15 and lower. Then it went lower. Beauty. Amen. What else we got going in this arena? Well, also have, take a moment to flip over to Bitcoin. Bitcoin, I want you to keep an eye on this, Emil. Look at Bitcoin futures. This is something I've been watching, and about 95% of the time, write this down, guys. When Bitcoin gives you a green candle on the daily chart, green candle, 3 days in a row, it typically goes on a 2 to 4 week run. 3 days in a row. So we got basically two so far. I mean, it's not over yet. And it has to be tied in with Ethereum. Both have to have green candles 3 days in a row. So if we get another update tomorrow, which is kind of leading toward the tariff talk and the tariffs initially taking impact, and if they hear, well, nobody's balking at it, they're all paying, we just made billions and billions of dollars into the system based on those tariffs, and all of these other companies are moving to manufacturing. You've been hearing car industries, the pharmaceuticals coming back, a lot of things are coming back. So we get the 3 day, three candles, three green candles, then look for a 2 to 4 week run, and it's about 95% of the time. I like those odds. So what is that again? If Bitcoin on the futures right here, BTC1 exclamation, if Bitcoin futures has three green candles in a row, it typically goes on a 2 to 4 week run. And it has to match with Ethereum, ETH1 exclamation. So keep an eye on these, because if it does, what are we talking about a run? Well, do the math. If we get this low, high, higher low, let me just remove some of these targets, cancel. Move some of these targets out of here, and I'll put a fresh one on for you. But just this small run, 3.2, and I'll stretch this out so it makes it a little easier to see. Just this small run, it's not the big run, but the small run from that high, that low to that high to this higher low, we're shooting for 95, 96 area. All right. What do we got to do? We got to go breaking above the magic Fibo, game on, 95, 96. We start breaking that. You come back a little further and you say, what about the recent move from the all-time high to this most recent low? Then as we start to get to those targets, we're going to be breaking this target. See it? At 618 would be these targets above. That sets the tone once we get there to a move continuation up toward 114, 118, maybe even 130. Wow, quite the run. And that could happen in 2 to 4 weeks, you betcha. So my first target would be 95, 96 area. Then we break that. You kind of got to go back with the psychological bear of 100,000. Then the prior swing point, about 108, 109, and then 114, 118, 130. Amen? So, do we get it? That is the question. Do we get it? Or is this going to be a little three-wave correction and we get another push? Well, this is make or break time for Bitcoin and the cryptos. Make or break. Even if this is that 5-wave down and this ends up in a 3-wave correction and we can't break this zone up here, that 618, 786 area, Houston, we have a problem. If this were to complete and get rejected and we break back below the low, then this might be the end of Bitcoin's run for this time, this halving. I don't think that's the case, but it's getting down to the nitty gritty. Is it going to do it? Yes or no? It's high time. We still have clockwise. We're into April. We're 12 months out from the prior halving, or later this month. Toward the end of the month in April last year, the halving occurred. So we're still within the 12-month zone. We're certainly within the 18 months. But I do want to see our market start ripping higher. And if ES goes breaking out, so will Bitcoin. And that's the plan. And I'm giving you upside targets once we start clearing this little resistance zone around that 87, 88. Then we got 95, 96, 100, 101. Then we start focusing way over here, 114, 118, 130. And the plan is still the same, that once we start getting in this zone in this big green box up here, our extensions through the miners like Mara and BTBT, etc., should start going much higher as well. That's the plan. I did actually load a little bit more BTBT down here below 2, which is fine. And I'm looking for that to go higher. I'm looking for Mara to go much higher. And when of these go berserk, those are going to go insane to the upside like a rocket. It's going to be a SpaceX rocket going to the moon soon when Bitcoin finally does what? Breaks out and gets into this green box. This green box represents not only a target zone for Bitcoin to go to, but once pricing gets up here, the value pushes your miners like Mara and BTBT, among others, right? There's a lot of them in here, not just so much on here, but there are other ones that their profit margin goes through the roof. So I can't wait, Harold, till we get up here and we can finally go, wow, he was right. Man, when it finally got up here, they're gonna increase in value as this has to get up here. But once it gets to this zone, Mara and these BTBT and those miners should really go vertical. And that's the plan. Ultimate plan is once we get up here to the, still my target is still hasn't changed, 150 to 175 area. Once we're up there, I'm going to sell all my Mara, my Bitto, Riot, all my crypto plays, my Ethereum, my ETHU, everything in this zone. I'm going to sell my Solana, all of those, unload them. And then why is that a big picture? Come out here to a weekly. This is what we've learned in crypto over the years that I've been watching this arena, that typically every 4 years we top out all-time highs from one halving to the next. So you can see here we topped out in like 17, made all-time highs. Then we topped out in 21, made all-time highs. So when do we do to top out? 2025. That's got going for us as well. It was late 21, late 17, rinse and repeat. Even the prior one was late 13 when it topped out. Got it? After a halving, 12 to 18 months later, you typically top out for the last bit of the crypto bull run. You go into a crypto winter, and typically you bottom in reverse every 4 years. So we started bottoming over here. Then let me kind of bring that back into perspective. This past year, we bottomed in 2019. So 4 years plus that puts us in late 22, which we bottomed in 22, 23 here. Prior one here, around 18-ish. 4 years later, 22. See it? Email over and over. And then from 22, when should we bottom next? Sometime late 26. So if you want to trade crypto and make a lot of money on a consistent basis, wait to start buying crypto in 22. You'd have made a mint by the time we got to 25 when we finally top out. And then over here, you were buying down at 18, you're selling at around 21. That's the plan. So when are we going to sell everything? When Bitcoin gets that 150, 175 target zone? And then it'll be sometime late this year is my plan, somewhere September, October. Then what? Harold, when it bottoms in 26, like we bottomed in late 22 over here, we bottomed in late 18, like every 4 years. Before that, we bottomed in that 14 zone over here. 14, 15. Yep, 14, late December, that little wick right there. So 14, 18, 22, 26. Then we look to buy in 26 again. Fair enough? So zooming in. Again, what do we need? We need Bitcoin and Ethereum to give us one more green candle, a third green candle in a row. Bitcoin plus Ethereum. This is on the futures. So this one right here, BTC1, we get 3 green candles. ETH1, we get 3 green candles. That typically means 95% of the time, Bitcoin and Ethereum go on well, Bitcoin does, and it pulls Ethereum, goes on a 2 to 4 week run. So, Harrow, if that plays out, let's just take into consideration this closes green today, and then tomorrow it closes green. So that would be on Wednesday, close, we get green. Then we go from midweek, the first week of April, through 2 to 4 weeks would put us mid-April to late April. And where should Mr. Bitcoin be hovering? That's why we're talking about these target zones. And our targets for the future are, we start breaking. Let's go back and zoom. I think I did it on that one. Start zooming this in. And it's roughly the same price, so it doesn't matter which chart, but make sure you're looking at the green candles on the futures. But once we get that, we start breaking out. We should go to 95, 96. And then what? 100. We break that. Game on for 114, 118, 130. So is this the beginning of the big breakout? Yeah. But Bitcoin, in all cases, even during that 2 to 4 week rally, it doesn't go up straight every day. It will stair step its way for 2 to 4 weeks, 95% of the time. Got it? All right. Any questions on that? So, what do we have that we can use in the Bitcoin arena? If we don't want to trade Forex, you can buy, don't want to trade crypto, you can buy like the miners, Bitto, Mara. Those are some I highly believe in. I was able to make a lot of money on these already, and I'm looking to make some more as this final push in Bitcoin goes up. We're going to get a big push in Mara and BTBT, especially when it gets up into this price zone. Those should go skyrocketing, but there are other ways to trade a little leverage. BITU is a Pro Shares Ultra Bitcoin, and this thing should go ripping higher as well. And basically, we got a 618786 retracement since it's been out. And this would set up our extension up here at about 80 to 90, maybe 100 range. When Bitcoin gets to 150, 175, where would I expect this BitU? Be somewhere in the zone up here. Amen. I could be wrong. Bitcoin could have topped already and we get that three-wave correction and it's all doom and gloom, but we're still going to get a rally. And if we do go breaking out like we expect and we get to September, October, I would not be surprised to see BitU up in this extension zone. And all that is from a 3.2 swing point low to swing point high. You get the retracement and then you go to the extension. Fair enough? And other one is BitX, also a leverage product. It's kind of in the same boat. Swing point low to swing point high. You get that three-wave too. You're looking at somewhere around 88 to 100, maybe 122 zone. Wow. So look for this thing to go ripping. Back when Bitcoin bottomed recently around August 24th, it did what? August? It went up until December. A few months later, went from 19 bucks to 70 plus dollars. So this is the type of ripping higher we're expecting these targets to come into play. And by when? September, October. Could be sooner, and it may not happen at all. So risk, all trading involves risk. Can't tell you what to do, but I'm a big proponent believing in that this is going to go higher. And imagine what we can do with these coming in. We get to 22 low, right? This wasn't even out when we had the last crypto bull run to the crypto winter low. We didn't have it. So imagine what we can do with this going into 2026, Harold. How low is that baby going to go in 2026? We shall see, right? But we can start nibbling when we get to late fall of 26, and we believe Bitcoin's getting near its bottom reversal zone for the next halving in 2028. We can start nibbling in 2026, maybe late 26, early 27, start nibbling and get us a little investment there. And then we'll hold it past 28, having going into top and reverse into fall of 29. That's the plan. Amen. And these things are dramatic when they do it. All right. There you have it. The other is with ETH, is ETHU. Look at this thing. We bought early. We topped out around 12, had a quadruple from $3, $4 to $12, a triple. Took the profits, bought some more down at these ridiculously lows. So if Ethereum could finally go breaking out, this thing could go ripping. And if all we get Ethereum to go back to 4,000, this ETHU should be somewhere around the $12 range. But if Ethereum could finally break 4,000 and make its run toward that 57, let me get my Ethereum on here. It was up to 7,000 is the extension to 5,000. And if we can get up to this zone, then I think you're going to see ETHU up in its respective zone, so around that 18 to 20 plus dollar range. Not too shabby, from $2 to $20. I like it. And if it goes breaking out to the next level where ETHU, Ethereum actually breaks 5,000, starts moving toward its extension, and this is the bigger move over here, the 7,000 range, where do you think ETHU is going to be? That would push it out to its next level of extensions, and that would put us out into roughly the 25 to 30, $40 range. And if we go toward 10,000 and just go ripping, then we could be in the 50, 60 range. Just follow the level of extensions. Level, 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 onward and upwards. Amen? All right. How about Black Gold Texas T? Trying to break out, Arrow? Is it going to do it? Watching this closely. If we start breaking above that 74, then we know what our targets are, 82, 84, 90. Could this be the breakout we were looking for? Maybe. Be careful. If you're long, Dan, we've been talking about this perfect time to take a little profits off the table. I do think it can go higher. Absolutely. We start breaking above the closing above the magic Fibbo line, then my target is that 74 and change, $75 range. We start closing above that on a daily candle, not a wick, but a body, then 82, 84, break those, 90. Much higher, potentially. This could still get rejected to come down and make one more swing point low, which is still on the table until price proves otherwise. That low over here, 63. So this is why there's a good time rallying into here. Unless we go breaking out, great. You know what your targets are. But if we get rejected, and this baby gets rejected and pushes down and doesn't hold that 67-ish range, 67, 66 range, then we'll start targeting 63, maybe even 61. So force price to prove it. Why are we more bullish than bearish? Because the software is screaming that we're reversing and going a bit higher. We saw that the last several weeks, that my weekly is reversing. Reversal, 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 reversal. So could this continue? You betcha. Weekly's just barely getting started. My daily's finishing up after some major slingshot action, grinding. So this is why it's a perfect time, Dan and others. My daily's getting overbought. We're running into the cloud, the magic Fibbo area. Could we get rejected from there and get a daily cycle down? You betcha. It's certainly possible. What is the level that needs to be met? It's from the low to the high. So whether you're doing Fibbos and from the low to the current high, as long as we hold this 67 and change, 67, 66 area, 618, 786. So could this be the case that we rally in here, we turn over, come back a 618 retracement to continue higher, and this baby just turns over to slingshot higher and higher as the weekly continues to cycle? Absolutely. This is why when I get this big run, I like to be in a position of authority, right, Mr. Tucson? So that even if it does reverse, it'll pip us out for more profit. But there's my make or break level Long as that retracement coming back down holds this zone, then there's no reason to believe we're not going up higher toward that 80, 82, 84 target over there, which is what I'm showing you on 82, 84. Any questions on that? All right, gold and silver. Be extremely careful with gold. We're reaching this extension and we're getting closer and closer to what I believe is going to be a reversal and a profit taking, if you will, whatever reason you want to call it. Just a technical picture. This has been on quite the run. So we're overdue for a magic fibbo of the daily line. We haven't visited in quite some time. Been a long time since we visited that magic fibbo, and it's overdue. So I don't think this is just going straight up. I think we're going to get that bigger correction. But now that we're reaching those extensions, we're long overdue for a daily magic fibbo. So be careful. Silver, still think we got a major upside on silver. Long term, short term, if gold takes this pullback, we might get the bigger pullback on silver. And I still have some junk bids down here for SLV that if it can get to 25 or lower, I'm adding to my position for the long term multi-year move where we're not only going to go back and start, breaking 38 and some of these 40 levels, but you come back here to a weekly chart and this prior high to low, what has this done for us? We already broke the 618 to the upside from this all-time high to this recent low during COVID. We have the 618 level right around 27 and change, and we closed above that level. You can see we're above it right now. That tells me, right, Harold, 75% chance in the coming years we're going to 60, 70. 75% we're going to 60, 70 plus we're going to 70 area. So I'd love to see gold give us a pullback toward the daily Fibbo, while silver gives us a little flush down into the 25 or lower area to set up a double plus, if not a triple, in the years to come. So I clearly think silver has major upside, like that big arrow over here, major upside. When is it going to play out? That's the question. So I definitely think we're going to get up here. No ifs, no buts, no ands, no exceptions. We're going to get here. But is it going to be a year, 2 years, 3 years? Don't know. Do not know. But if we do get that pullback to 25, and again, there is a little fee you pay, about 0.5% right there, expense ratio. Get my highlighter on there for you. Expense ratio right there. That we see 0.5%. Amen? All right. So in closing on silver, long-term bull, extremely bull. Just be careful that gold may, long overdue, get a correction back down after this big, look at that run. Just vertical. It's time for correction back to the magic Fibbo. And we're talking in the neighborhood, not the weekly, but the daily, that is, of about 300 bucks ish, somewhere in that zone. So Harold, what is it going to look like after this big impulsive move up? We're likely to see like a 3-wave correction coming back down. Then we can reload silver, reload gold, and then shoot for the extensions 32, 34, 36 as we rinse and repeat with gold to continue to go higher, but long overdue for a correction. Long overdue. And even that last correction, we didn't touch the Fibbo. So we're really, 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 really overdue to touch the magic Fibbo. All right. Any questions on what we reviewed? I'll go ahead and circle the wagons. Couple of things I definitely think was going to happen is I believe ES and our markets are reversing. Just a quick little review that this new only one here has a higher low, but everybody else, SPX, made a lower low. SPY made a lower low. This is setting up a correction toward the upside, a reversal. And in my humble opinion, as long as we don't get something like a three wave to stop in its tracks around this 618 level to then get rejected, Houston, we got a major problem if that happens because we're going to go much lower. Otherwise, if we go up here, retrace to 618, hold it, go breaking out, or even testing this, get a little 618 retracement to go breaking out, then you know where we're headed. 622, 630, 650. That extrapolates in ES language to 6,300, 6,600 zone. And that's a long way to go from where we currently are, 56 to 66. That's 1,000 more points. How long is it going to take for us to get that 1,000 more points? I think it's going to take multiple months, and we probably won't see those levels until, move this back this way, my September, October-ish zone. So Harold is what I'm looking for. So I'm beginning a stair step, start breaking out, and just grind and grunt its way into this target zone somewhere into mid to late fall. Amen. Got it. NASDAQ, same thing. Critical levels to watch. We did get a new swing point low. We got to break the daily Fibbo up here, magic Fibbo line. And then once we do, we got the hurdle up here, that 618, right around 21, 22 level. But once that's taken out, game on. Game on for 23, 24. And I think we're going to end up topping somewhere around that 24 to 26,000. Then we get our Elizabeth, I'm coming to join you, honey. QQQ, basically the same, but a fraction of the price, is that as long as we don't rally into a 618 and get rejected, that would put us to go much, much lower into the 400, 375 range. Ouch. Where as long as we break above and then we hold a 618 retracement to start breaking out, once we start taking out our 618 up here right around that 509, 510 level, the zone right there, 618. 509 and change. Kind of like this pink box. Once we start taking that out, then it's game on. 550, 560, 5, basically 600. Amen. And I think we're going to end up reversing from somewhere in that 600 area. For Elizabeth, I'm coming to join you, honey. So no matter how you trade NQ or these others, I do think they're going to go much higher before it's done. Russell's the only one that yes, I think it's going to go higher, but not break all-time highs. It's simply going to go and make a lower high. But I think this bottom reversal, we did make a slight lower low. I think we are going to reverse. Where's my reversal top for that one? Somewhere around that 2300, 2400 zone. This big box is where I think the Russell is going to do what everybody else does as we go into summer, fall, September, October-ish, be somewhere in that 23 to 24 area before we get to Elizabeth. I'm coming to join you, honey, in late fall. That's kind of the plan for now. And on IWM, fraction of the numbers, but it's the same principle. We don't want to see a three-wave correction and come back and get rejected off of this 218-ish level. Actually, I got to move this down that way from that high to the low. a new low that is. We want to get above the magic Fibbo line. You can see it right there. So we start getting above that zone, then it's all about going up here to 230, 240. And that's where I think this is going to reverse from. So highest we'll get is up to this zone, but I think we're going to reverse in that 230 to 240 area. So what am I trying to tell you, Harold? That once we're in this 230 to 240 area, I believe your S&P 500 is going to be at that 6,400 to 6,600 level. When we get there, I think our NASDAQ is going to be at that 24 to 26,000 level. And IWM will be at the 230 to 240 level. And Russell will be somewhere between that 2,300 to 2,400 level, kind of like 1/10 the price roughly, 2,200, close enough. Get the point. So with that, I'll say good luck, God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Don't forget that we do have this on NinjaTrader, and NinjaTrader does offer some new interesting things coming. NinjaTrader was bought out by, let me see if I can get there, was bought out by Kraken, which is one of the crypto companies. So that means NinjaTrader is going to offer us a lot of crypto opportunities in the future, which is fine by me. So as my weekly starts reversing, TSLL, we talked about with Tesla and all, should go ripping higher. We have our magic Fibbos on here. You go to your drawing tools. You have the MPA Fibonacci retracement extensions like we see on TradingView for ease and convenience. I've had that program for your ease and convenience to use on NinjaTrader. And the weekly's reversing, looking good, setting up that TSL trade to go ballistic as we expect our Tesla also starting to reverse, start to go ripping higher back in the 500-600 range. So TSLL should go to that 40 to 50-ish range is the plan, like it did over here when Tesla went from 200 to 400 plus. When I said in October it was going to make a run toward 500, fell just shy, which is fine. And then our TSLL went from $8 to $41. So now I think Tesla's going to make this run from this 2-ish range back to the 5 to 6 range. And then the TSLL should bring us to that $40 to $50 range is the plan. So with that, again, take care. God bless you. We love and appreciate you. That's it. That's all. We'll see you tomorrow.